welcome everybody. The subject of the ATO, people, especially myself and Louisa, for example, and I'm sure Robbie a little bit as well, probably Danny as well, we've been talking about the ATO and tax debt. And it's one of those things, you're talking about it all the time and you don't realise that it's news to everybody else when the ATO, when it becomes a fact that as of the 1st of July, the interest on ATO debt is no longer tax deductible. And for us that are sort of dealing with it all the time, we go, well, that's okay. But it was big news. The thing that struck me about it, having seen a lot of ATO debt myself, it's one of the primary triggers for the working capital finance that we do at Hermes Capital. It's probably a primary trigger for you too, Louisa. The thing is, I don't know about you, but when I saw that, I thought tax deductibility. I mean, that's the last thing I think that's on the mind of the people that we're dealing with. When you're talking to someone, and they've got, they're turning over $10 million a year and somehow they've got a $3 million ATO debt. I think the tax deductibility is not the issue. The losing their house and business part of it is probably
Absolutely
more top of mind. And the other thing is, Robbie and I were talking a little bit earlier about how many of these small business restructurings we're seeing, and they're just getting jammed through. It was 20 cents in the dollar, 30 cents in the dollar, 40 cents in the dollar. And what we know is that it doesn't, just wiping debt off doesn't solve the business's problems. The reason people think, you say to people, why do you need the funding? Oh, I need it because I've got ATO debt. No, that's not why you need the funding. You've got the ATO debt because of something else that's going on in the business. And so that's really what inspired this morning's panel. So I'm very, very privileged to be joined by my panelists today. Because I was born in the 1960s, I'm going to introduce Louisa first. Thank you, Louisa Sidgerbat, who is the managing partner, principal of Merchant Advisory, and has joined me on my podcasts and live streams in the past, being the referee of a personal friend's bankruptcy and all sorts of things. We've worked together. So thank you very much, Louisa. And Rob Gruhl, principal partner, G&H, and also Compass. So Robbie's a finance broker and also helps with a bit of has a business that does finance broker aggregation in the commercial space. So in that sense, he's something of a mentor to finance brokers. I think it's fair to say when they get something that's a bit of a stumper, they ring Robbie and ask him how to do it and where to go. And Danny Garley, who is the principal managing partner of PFS Accountants. So we have a real life accountant here who deals with small businesses all the time, and probably the first phone call that gets made, I suppose, when they get one of those nasty letters from the ATO. Although you probably know it's coming, I guess it's half the time.
Yeah.
Before it even arrives. So we're just going to start very briefly. I'd like each of you just to, I'll start again, 1960s born. Start with Louisa. Tell us just a little bit about how you engage with SMEs that are ATO debt affected, and just a snapshot of what you're seeing in the landscape today.
Yep, sure. Hi, morning. I'm Louisa Sidgerbat, Merchants Advisory. So I'm a registered liquidator, restructuring practitioner, and a bankruptcy trustee. Now that's a hard line when you're trying to make friends in a room, especially for the first time. However, I do see that there is a positive angle to what I do, which is looking at whatever tools and solutions are available to me or that I'm licensed to implement, and seeing if it's actually a good fit for the particular client that somebody might be looking at, to see if we can all help them, whatever that means, and in my little corner of the world, what help I'm able to offer. What am I seeing? I am seeing the ATO go hard, especially if there is no complying payment plan, and if there is what the ATO perceives to be a lack of engagement or acceptable engagement by the taxpayer. And by go hard, we are seeing director penalty notices or DPNs being issued. We're seeing garnishes, including of like merchant facilities. Somebody told me yesterday that the ATO was garnishing 15% off their merchant facility. For better or for worse, they are a law firm also. And seeing the ATO do directed and targeted collection and firm actions on people if they're not satisfied with how that taxpayer is behaving.
All right. Thank you very much, Louisa. Robbie?
Robert Gruhl. Nick, you've already introduced me, G&H Financial. When a client's referred to us, it's generally for some form of lending, and there's always a level of distress. Obviously, at the moment, it is the ATO. Traditionally with us, it could be industry related, but what we're seeing at the moment, it's pretty much hitting all industries. Obviously, there are some worse than others, but we're seeing across the board these days tax debt on almost every file. So we do traditional lending as well. So we'll do standard asset acquisition, fleet management, all that sort of stuff. But now seeing a clear tax portal as opposed to seeing a tax debt, a clear tax portal is almost more of a have you not lodged? You know what I mean? Like, the fact that it's clear is more of an alarm than anything else. On maybe more of a positive note, we are seeing lenders accepting tax debt. Traditionally, tax debt, loans would be approved subject to a clear tax portal. Then we'd see loans would be approved subject to, the tax debt being maybe a percentage of turnover. And then we were seeing, as it was loosening up, we were seeing loans being approved subject to a payment plan. Now we're seeing lending to pay out tax debt. So lenders are being forced to accept that the tax debt is real and relevant in 2025. Everyone in this room, by the looks of it, was around during the GFC, was around during COVID. This recession that we're not allowed to talk about seems to have hit all industries and all businesses, and it's hit lenders as well. Lenders have a mandate to their investors and their shareholders to lend money and to maintain a low level of arrears, but it's very difficult to lend money if you're not addressing the elephant in the room, which is the ATO. So we're seeing a lot of ATO debt and we're trying to help people with it.
You said recession, so there's a couple of guys in dark suits out there with sunglasses that are probably going to take you away.
Yeah, wouldn't be the first time.
Do you think that are the lenders are more open to the tax debt because otherwise they wouldn't write any business, or is it because they've enlightened?
I know there are some lenders in the room. I'm going to say something that's a little bit contentious about lenders. I don't think lenders are generally overly enlightened. They're generally behind the eight ball when it comes to this sort of thing. I think it's because they've got to get money out the door. Things like, and this is not necessarily directed at lenders. This is probably more directed at people that make legislation. You look at things like the SBR, and it sounded great, and it has been great. It's probably been abused a little bit, but it has been great. But then I talked to credit, and credit is sitting there going, we don't know how we're going to handle an SBR. We don't know if we're going to treat that as an insult, as a formal default. I say to credit, how long after an SBR till you lend? And some people are saying as soon as it's finalised. Some people are saying 2 years later. The lenders have to scramble to catch up with what the government does. So I think it's more, to answer your question, I wouldn't say it's that they're enlightened. I think they're just being forced to accept that the market is where it is and they need to lend money.
All right, thanks, Robert. Danny, what are you seeing in terms of how you're engaging with small businesses that have got tax debt? You've got told 10,000 small business clients.
Yep.
The boys might have exaggerated on that.
It's a good estimate.
Yep.
Just to give you guys a bit of background of PFS, and it's been going on for a while. With PFS, it was established back in 2013. I've divided the business into two parts. All right, tax compliance, all right, which is the normal compliance with the ATO, and what we refer as commercial accounting. And commercial accounting is really, really important for businesses out there. And I think that plays a major role today. Number one, I want to make it clear, we don't outsource. We refuse to outsource overseas because we're all about service, okay? Giving young people, especially in Australia, opportunities, uni students and all that in the commercial sector, right? So a lot of people at uni, they work 3-4 days a week as a junior bookkeeper, all right, in PFS, and they do the normal data entry, bookkeeping, whether they're using Xero or NY. I think the first thing everyone needs to understand, each business needs to have financial accounting software. All right. Let's start with the start, right?
Yep.
So that's important. My business model is that we must provide service. Okay. And when I mean service, I mean 24/7 service. Okay. With an economy like this. And I'm not kidding. You know what I mean? It could be a Sunday afternoon where you get a call, someone wants to buy a car, all right, or they need to make a decision. Accountants have to be on the front line or they will not survive, okay? Because trying to get resources to do our job, all right, is nearly trying to find the right person is very, very hard to find the right job, the right person. See, at the end of the day, you have to work with what you've got, okay? Our business works 6 days a week, and the reason why it works 6 days a week, it lines itself up with property development and construction. So if construction can work 6 days a week, so do we. All right, and we've been doing that for over 15 years. All right, to give you a bit of a background. Now, the commercial side of things is we're located in Camperdown. Okay, our landlord's Gilcorp. All right, and across the roads, Camperdown Fitness. Okay, so I mean, a lot of people in this room would know where Camperdown is. The first thing I do is, especially with new business, okay, with new business, the ATO's put more and more compliance on for, and it's hard running an accounting firm because the ATO has gone and put new procedures on that we haven't even allowed for. So an example of that, Nick, is the onboarding. Okay, now since 1st November 3, the onboarding systems come on, so clients have to nominate PFS for the to technically be their accounting firm. The first thing I do is when I get a new client, I do what they call a health check. All right, and it's important to do a health check. And I tell my clients, the new clients, I tell them that it's free of charge, and there's certain things I want to know about the small business annual firm. Now, the most important thing about doing the health check is, number one, it's free of charge, right? And you, as an accountant, want to be in control, right? That's the important thing. This health check, right, is important to actually educate the director of the actual company on how to manage their business. This health check, and this is what I say, you can be a director of a painting firm or hydraulics or a plumber, any type of trade in construction. But I educate them, Nick, that they have to wear different hats. And what I mean by that, they have to become a lawyer. They have to become an accountant. They have to be a project manager. They have to look at contract administration. They're going to be a director of the company. They must wear different hats. You can trust me or trust your lawyer or your bank manager or your broker, but that's not good enough. You have to wear different hats if you're going to run a business. The health check that I do, I want to look at what number one question I ask, Nick, is why are you coming to PF? Why are you changing accountants? And the answers are, my accountants don't answer my calls. I don't get the service. I don't want 3 a.m. emails coming from the Philippines or India. Okay.
I think it certainly opens up a whole lot of other questions
Correct.
about AI and all that sort of stuff.
Correct.
Interesting you talk about everybody should have an accounting system and the MYOB or the Xero or whatever, and sometimes some of the stuff that we see, you should have a license to drive those things
Correct.
as well, because they can end up in a... I'll keep...
Can I just finish off?
Yeah.
Sorry, Nick, to do, because I want to get to a valid point here. The reason why I do the health check is I look at what the previous accountants has actually done. And one of the things that they've got in their balance sheet is a debit loan to the directors for $300,000 to $500,000. And I'm looking at it and saying, hang on, I've got a problem here. And this is a health check. I said, so what are you talking about, Daddy? No one's ever told me this. I said, well, let me tell you, this is going to get cleaned up and washed out, or you're going to return the money. Because, and I'm not being negative, but if you the company technically gets in trouble, a liquidator would love looking at that balance sheet. And the first thing they say to me, why are you telling me? Why did my previous accountant that I've been dealing with for 8 to 10 years are telling me? So my point is that directors have to take responsibility, and they need to understand their business and their balance sheets and their P&L.
I think there's no doubt a lot of people like to, we talked before, they love to blame their accountants and blame their bookkeeper and blame, and I do 100% agree that people need to take responsibility.
Yep.
Louisa, so, I was a restructuring professional. What are some of the first warning signs that you see that someone's heading into trouble beyond just the tax debt? Because, as I said, to me, tax debt's symptomatic. Perhaps what Danny's talking about there is also symptomatic.
Perfect
Loan accounts.
segues. Yep.
Yeah.
So by the time they come to me, perhaps to talk about an SBR if they want to try and rescue the business. We're not seeing it at the very earliest of the warning signs, but I'll share some things that we do see, and the accountants in the room will no doubt see some things a bit earlier on as well. So some things that come to mind is client not contactable, client not returning calls, client not returning emails, especially from an accountant's point of view. Part of the reason is they feel that if they can't pay their existing tax debt, that perhaps they shouldn't be lodging more lodgements because that will only result in more tax debt. Now, this is not a very good strategy, probably obviously to us, but not so obviously to the people we speak with, because that does affect how, if any, director penalties are issued down the road. So lodgement timings do count, but the clients that we see are afraid to lodge because they don't want that tax debt number to go up. Which sometimes means then they ghost all their accountants, and often they're often in arrears paying their accountant's bill anyway. So that now makes a few reasons in their mind why they're hesitating or just not reaching out
Could
to
be
their
why the
accountant at
accountant-
all. It could be, but I don't know that that's primarily the issue. As much as people ring us with things like the accountant's not calling us, and it's like, and how were you in terms of, proactivity with your accountant in the 6 months leading up to that situation? Did you pay their bill? Oh, you didn't. Okay, so maybe that's why they're not calling you back. So one of the other interesting things we see is director or owners not being paid properly out of their companies, as actually one of the less commonly spoken about indicators, but very common indicators. A lot of directors are trying to do the right thing, in my experience. It's probably about 95, 97% of them. There are the rogues, of course, who are trying to rip off the system, but in my experience, that's actually not the majority. The majority are hardworking families running SMEs where perhaps got a bit too much or got beyond their skill level. And in their good-heartedness, they've gone, I'll pay the boys on the tools, or I'll pay the people in the office, or I'll pay my staff. And it's okay. At first it starts with like half pay, or they'll lend money in personally from their home loan and then repay it when the business can afford to do so. But then it tends to move by the time it's gotten to me to sometimes they're not being paid at all. And in some cases, one I spoke to last week hasn't paid himself in a year. So they're living off, the smell of an oily rag. So that's something I'm seeing as well when they're not paying themselves properly, which of course results in debit loans because now they're putting personal fuel through the business because they don't have money to pay for their own personal petrol.
But this is a marker of a problem within the business.
Oh,
itself.
absolutely. It's a marker of a deeper problem. But in terms of symptoms or what am I seeing? But of course, these are not the end problems in themselves. All the usual unpaid other creditors. Super is, of course, a top candidate there. Whoever is not screaming for their money in terms of creditors, shifting suppliers because they can't get credit or supply out of another one. But it often goes with, oh, but I didn't like them. Their product went downhill. Their people were difficult to deal with, rather than we're on stop credit because we haven't paid them. The robbing Peter to pay Paul and that cash flow juggle. Often it starts in a good place of we just need to use the cash to pay people because we are trying to pay people. But then it becomes often a string of broken promises and people then trust erodes in the situation. So clients who flag, some of them will take responsibility, but some of them won't. And they'll flag it's everyone else's fault. It's like, well, it's everyone else's fault because you didn't pay them, but that's okay. We'll move past that and try and help you out. The personal stress, the personal toll, that I don't like to open mail because there is no good mail left for them. There are very few checks and it's all bills. So we do see that. So when we say, have you received a director penalty notice? And they say, I don't know, is not a far jump to go, can you just open the mail that you got? Oh, yeah, okay, sure. Because that's just how they are. They're stressed. They're people the same way we're people. And they're doing what a lot of people would do in a stressed situation. So that's a sampling of.
Can I just throw something in there as well?
Yeah, of course, Rob.
What I'm saying, smack bang on what you're saying, is reactionary borrowing. So
Yes, actually.
you sit there and
Yes.
you and I have done quite a few, but you sit there and you've got these loans and they're not fit for purpose.
No.
You've got these directors going out and getting, and there's probably nothing wrong with that loan for another client, right?
Yes.
This is not about, it's not about necessarily the loan itself, but you're getting these short-term loans or these
Yes.
cash injections at
Correct.
really high interest rates. It's all very reactionary and
Yes.
it just ends
100%.
up, yeah. So going on with what you're saying, just reaction rather than forethought.
Yes.
What's
And-
interesting,
And family borrowing.
well, I tell family you're never going to see that money again.
Well,
Well-
any out of the three Fs?
Exactly.
Yes.
Family, friends,
And fools.
fools. Yeah.
The lenders of last
Yeah.
resort.
Well,
the
I
three
always
Fs.
tell family to take a security, but
That's smart.
building on what Robbie's saying,
Yep.
one of the boys, we saw a deal yesterday. Sayed had a deal yesterday, and I think they're turning over $40 million or something like this. Transport business, and there's $1 million. They needed $1 million. And we're going, well, yes, well, we can do that, but we need to look at some information and we need to look at what security you're offering. I know XYZ lender, we all know, we won't mention, but they're going to do it tomorrow. And, of course, they've already got the charges, they've got the caveats, and
Over 9 months as well.
well, I explained the maths to Sayed yesterday, but the trouble is that once that's started, it's very hard to shift. Listen,
Yes.
just staying with you, Rob. We've talked about talking to the lenders and the ATO debt. When there is ATO debt, what do lenders like to hear about it? I mean, sometimes there's good problems and bad problems in my experience. What do lenders like to hear, and how do you frame that? And what do they not want to hear?
I'll start off with what do they not want to hear? Habitual offenders. Habitual offenders are always going to be frowned upon. The DPN, sorry, not the DPN, the DIN, the Director's Identification Number was a good start towards people, consistently churning and burning. It was probably poorly implemented, but now, everyone in this room knows what their DIN is and how to get it. But repeat offenders will always be a problem. What do they like to hear? They want to know how it got to where it is. Right. Same as, does it pass the pub test? Right. So how did the business get here? Was it distress? Was it growth? I mean, you've got plenty of businesses that end up with ATO debt because they've gone on a really fast growth trajectory. Right. So it's not always it is a bad thing, but it's not always doom and gloom, right? So how did the debt accrue and what are we going to do about it? Right. So let's assume we're lending not to resolve the ATO debt. Let's just assume we're lending for asset acquisition or trade or debtor or something else, but we need to acknowledge the ATO debt in the credit paper. Right. How did the debt accrue? What's the plan to resolve it? Are you a habitual offender? So basically, I, as you said, I do a lot of mentoring, and I reckon I spend a lot of time explaining to people new to industry, does it pass the pub test? And credit at the end of the day, credit sees hundreds of thousands of applications, throughout their time as a credit officer. There's not a scenario they haven't seen. So I guess that's does it pass the pub test? Can't make it simpler than that.
Yeah, I guess as a lender, you see that it's a new story for that client, but I know how the story ends.
Yeah.
Yeah.
All right, Danny. It was interesting. Louise mentioned the people not paying themselves.
Yep.
And whilst it might be on one hand seen as maybe an act of martyrdom,
Yep.
Louisa is pointing out that it is a symptom of maybe it's a pre-symptom of tax.
Yep.
You must see that a bit.
I see it all the time. So what we've done at PFS, we've actually invested in a lot of systems. Okay, there is a lot of good software out there for accountants. Not receiving a DPN is no excuse for us, to be honest with you. We use a software called ATO,
That's all good.
and every correspondence comes through electronic, and some directors have to keep up with the times, and that's really, really important because all correspondence go out to. One thing that it's compulsory for me, and what's really, really important is change. And there's companies out there that have been around for 25 years, 30 years. Doesn't matter if you've been 1 year or 40 years. You might not be around. If every financial year you do a restructure of your business and you build up a business model and you look at your P&Ls and your forecasts, your growth rates, you look at the ratios in the balance sheet, okay? And what you do is build a business model every financial year and set targets and KPIs and KRAs for your staff and the business itself, okay? Yes, cost of living's going up. Yes, we are increasing wages, all right? But we make sure that the business can sustain it at the end of the day. So there's no surprises. As a manager, you should never ever have a surprise in business. So one of the things you have to do, I think it's compulsory, is set companies' KPIs, business models, for every financial year. So tax is not a surprise at the end of the day. It's projected, it's forecasting. And when we're talking about payment arrangements and all that kind of stuff, Nick, what I do, I don't get into a payment arrangement. I do the reversal, and I find that works a lot better for me. Before I call the ATO and try to get into a payment arrangement, I make my clients actually prove to me and demonstrate to me and look at the ATO's tax portals, and they have to demonstrate to me that they can afford it. Okay, look at their behavior, because the ATO is looking at behavior and what you're actually doing behind the scenes. And what I do is, let's say they pay $5,000 a month and meeting future obligations, right? They have to prove to me that they've done 2-3 payments. Great, I'll get you into a payment plan.
And is that part of your story with the ATO? I think it's-
Absolutely, yeah.
So you'll say, I told them before, I know I was going to call you,
Yeah,
but rather than that, 3 months ago, we said, let's prove it first. And
Correct.
that works?
yes.
Yeah.
And we touch bases on DPNs, right? I review business models, and I know that the client's trading out of it because of the new business models,
Right,
the new
right.
KPIs. So when the client comes up to me and throws, this is a DPN, I said, you know what that is? I explain it to him. I say, I'm not concerned about it, all right, because I can see that you're trading out of it. And if you keep with those payments, it will actually reverse that DPN with credits. Now, the other thing is, a professional accountant will exhaust every avenue prior to going into an SBR or any type of administration or liquidation, because we don't want to go there. We want to work for our clients and represent our clients to actually trade out of it. But our clients must help themselves and meet us halfway.
Can I ask you, Danny, though,
Yeah.
do you like you're basically talking about imposing disciplines on the business?
Absolutely.
Don and I had a client recently where they've got $2 or $3 million worth of tax debt.
Yeah,
They're a client of ours, and we thought that we don't want to see them come to harm,
yeah,
and we've tried to get some professional help, and so we've tried to get an external party to impose some exactly what you were talking about,
yeah,
and that was just too hard. They just went and found another lender
yeah.
who cared less. And you think, well, I guess I could have, you know what I mean? I could have.
Yeah.
It's a little bit like,
Frustrating.
So, I mean, what do you do when you get the pushback?
Well, the thing is, what's really important, and I said it earlier, is the commercial arm. So you got the tax compliance day to day, and us accountants, and we want to, like, the way I've set up PFS, and it's not a selling tool, I'm not a salesperson, believe it or not. We run off KPIs, right? So we want to lodge a BAS. We tell our clients, we just want to lodge. It's good for business because I raise my invoice. And 2, we want to lodge everything within 3 months, because if we sit down in front of a liquidator, the first question is, have you been lodging on time? Yes, we have. So internally, it's part of our KPI because we are running a business, but we're educating the clients as well that you must lodge. My procedure commercially, if they've got an internal bookkeeper, all right, or they're using us to do the commercial bookkeeping for small businesses, all right, my procedure is that from 7 days after the last month, you must be ready to lodge. There's no excuse for a bookkeeper to be 7 days behind from live data.
Wow.
Just to lodge,
Yeah.
KPIs, invoice, and go. There's no excuses. So it's become a robot or a procedure in place where we just lodge. One thing that I want to touch base on, Nick, is that if my clients can't pay super by the 28th of July for the June quarter, my guys, my tax accountants that I've educated, trained, coached, and led, they'll put the super guarantee on the portal straight away so we avoid superannuation audits and reviews.
Right.
We've got to that procedure. We've looked at what the ATO is doing, and we've adapted our clients and ourselves working into a partnership to avoid reviews and audits because we don't have the resources. So our directors or our clients would say, Danny, just so you know, I can't pay the super. Have you paid it monthly? Yes, no. All right, we'll put the super guarantees on May, June. To avoid audits, have you lodged your BAS? Great. And we sit down and look at the business model. It's important to understand your business model. Look at your projections. I'm turning over 10 million. What have you done last year? Comparables, growth rates, ratios, and all that. And that's where I think, without being a selling tool, the commercial arm plays a major part because businesses might have the wrong CFO, the wrong GM, okay, the wrong internal accounting staff. Who's going there and getting second opinions?
It's interesting. I've always said there's two kinds of accounts, but you're both kinds.
It has to be.
I've always said there's the compliance ones, and
The
they don't want to get
commercial one.
involved, and I don't give advice. And then there's the ones that are your business partner, and you've got both. I just want to go off script a little bit
Yep.
because of something that Danny just said. I mean, we're talking sort of on technical terms, and I just want to go around and ask, what do you see that are the fundamental causes? It's either going to be not enough revenue, price isn't high enough, costs are too high. What are you normally? Is it a matter of cutting costs, lifting prices, finding new markets? What's generally what's generally going wrong at the very core?
Any of those, because that is fundamentally what a profit and loss statement is. You either have to fix your revenue or your expenses to get a better outcome. Taking an even higher bird's eye view, a lot of companies don't know is the problem. They have a gut feel towards, I think we need to trim this, or I think we might need to find new markets, but they don't know their numbers and they don't know what Danny's been talking about. So they don't know what to fix.
Right. So just flying blind.
Yep.
Rob?
I think what I've seen with a lot of long-term clients is they're always looking at their top line turnover. And I'll see clients year after year and they're always working on their top line. And they might be working on their EBIT as well to a certain extent. But the amount of times, when I'm reviewing the same set of financials year after year, and I'm looking at the balance sheet and I'm going, hang on, yes, you're growing, but your liquidity is not growing. You keep going for that. I want to hit 12 mil. I want to hit 20 mil. So I see that. And the other thing I see is directors drinking their own Kool-Aid. We will fix this. We believe in this. This is a family business. And it was interesting what you were saying about directors not paying themselves.
Yeah.
Directors are always the last people to pay themselves.
Yeah,
Whether that's
shouldn't
right
be.
or wrong. I mean, I have people
Yeah.
in my business that earn more than me. Directors are always the last people to pay themselves, but it's because decisions should never be made emotionally, right? Everyone in the room knows that. As soon as you make a decision emotionally and not commercially, you're going to stuff it up. But most small businesses, unless they've got really good mentors or really good advisors, most small businesses are going to make decisions emotionally. And as soon as that happens, you start seeing, cracks.
Danny, what do you see as the common fundamental mistakes? Revenue, costs, pricing? Because I imagine the tools that you're talking about implementing, you'd be picking those things up.
Absolutely. So we do monthly reporting with our clients. What took me by surprise is, the Zoom and team meetings. So, we picked up clients in WA, Canberra, Newcastle, and all that kind of stuff because of the service. People didn't want to come face to face. I'm attending a lot of Zoom meetings and all that because you're providing services. And that's really, really important. So what we do is part of our commercial side of things. We set up budgets for the business. We also have half an hour meetings and looking at forecasting. So we're managing growth rates and all that. The thing is, it's technically like I put certain procedures and milestones on. I don't like growth rates more than 20% because anything more than 20%, I think you lose control as a manager. And you've got internal bleeding. There's companies that we manage, and I always say to them, you're in intensive care. We need to get you out of intensive care unit and get you back on the ward. The thing is with directors as well, a lot of them have got a lot of ego. They're selfish. They put themselves first, and they need to be told that. And someone like me will tell face to face, I'm not worried about that. Okay. Do they put themselves last? Not really. Okay. Because at the end of the day, what we do as accountants, we just park their cash flow and their wages in the loan accounts. And then at the end of the year, we wash them out through and clear their Division 7A. In my procedure is there's no Division 7A, very little. All right. Maybe one or two in the whole firm. My guys are trained to wash it all out and put the ATO debt on. Okay, zero tolerance for that. But directors have got a lot of ego and they need to be put in their place. And you need to look at them in the eye and tell them, mate, I'm not the right person for you.
It's interesting. I think you talk about ego. I mean, I think you've got to have a certain amount of ego and a certain amount of crazy to go into business for yourself.
Yep.
I mean, you look at the compliance and all the things that could go wrong.
Yep.
So there certainly needs to be an element of that. Louisa, obviously you mentioned before you're in insolvency, and it's people sort of clam up a little bit. And, people are generally terrified when they have to face the inevitable. So I thought we might just do a round of war stories if we could.
Sure.
And would you have a good war story of where someone has been terrified of going into the process, but you've taken them through the process and it's
Yeah.
ended well?
Yeah. So we've heard this small business restructuring term being thrown about a little bit. Has anyone not heard of a small business restructuring, or they're not exactly sure what it is? All right. So in summary, the small business restructuring process came in 2021. It was one of the government's responses to COVID and a lot of small businesses building up debt, especially tax debt. So a small business restructuring is the ability for companies, so sadly not sole traders at this point, but companies to offer to their creditors, and in practice, this is primarily or solely the ATO, a reduced amount in full and final satisfaction of the company's ATO debt. So it's basically a debt compromise and a haircut. If the haircut goes well, the going rate at present is about 35 cents in the dollar, which, if you walk down the street and said to most people, do you want 2/3 of your tax debt? Most people are like, A, is this a scam? Or B, where do I sign up? Which has been said to me over the phone, is this legal? To which I've obviously said, yes, they wrote it into the law. So particular case where there was about 400,000 in tax debt. They were a company servicing the construction industry and councils, interestingly, doing drainage and water testing, like water quality testing. And during COVID, they had the flow and effects of a lot of the construction industry shut down or slow down, or depending how you describe it, depending on who you talk to. And then, of course, there was a bad run of weather shortly after 2021, 2022 as well, which of course affects construction days and then affects suppliers to the construction industry. On top of that, this particular client had lost a major customer, which they had considered as 35% of their revenue. So they'd also just lost 1/3 of their revenue off the bat. This story is from a few months ago. So the 35 cents in the dollar benchmark. Sorry, the ATO tend to be quite open to a payment plan as well. So the typical is about 35 cents in the dollar over 18 months in equal installments. The ATO, of course, look kindly on any upfront lump sum that can be offered, but they're quite willing to accept just on the installment payment plans. However, sometime last year, the standard was in the high 20s to 30 cents, but the ATO have gotten tighter since probably about the election, actually. So they offered 30 cents in the dollar. They were able to, because of their cash flow forecast, propose to pay this over 12 months, so a little bit shorter than the standard the ATO accept. And the ATO said yes. Robbie mentioned this before, and Danny mentioned it as well, and I'm going to say it as well. The ATO, when they are evaluating an SBR proposal, they actually want to know in quite a bit of detail, how did the company arrive at this situation? As in, what is the story in words as to why we're here and asking for this debt write-off? So we tell our clients, write 3 to 5 bullet points or 3 to 5 paragraphs about this, and then we'll talk to them about what they've written. Separately, the ATO also want to know what is going to be done differently so this company doesn't arrive here again in the future. And I'm literally echoing these guys because this is clearly what the ATO are wanting to know at all stages, not just my stage. So again, I asked them to write 3 to 5 dot points, 3 to 5 bullet points or paragraphs. What is going to be done differently? And it also means if they haven't already, they actually need to evaluate, often together with their accountant, the fundamentals of what isn't working in their business so that they can actually work it out to then be able to try and address and fix it. So the ATO actually want to know that. They want to see what the directors have written. And we, of course, will prompt for things like, and what are you doing about marketing and growing your revenue? Because they're usually quite good at saying we need to cut costs or something. Okay, what are you doing to grow your revenue? What are you going to do about your profit margin itself? Or I notice you only have 3 clients. Do you need to diversify if one client is 35% of your revenue and you've lost that client? So in this case, the client was able to come up with a good explanation and clearly acceptable enough to the ATO. They got their payment plan and they are now onwards and upwards, and not all cash flow now is going into historic debt, because yes, they have to pay their historic installment to the ATO, but it's not draining all their money. So they're getting a bit of working capital coming back into the business, get the wheels turning and getting the spiral working in the right direction for them this time.
Okay, thank you very much for that. We love to fund those upfront payments, just quietly.
Yes, sorry. So upfront payments are available and recommended.
That $50 earlier was for nothing.
Nick, were you sitting there listening to that scenario going, services, government contracts, receivables, is it progress? You were writing a credit paper in your head while she was talking about it.
We've now, Robbie.
What about yourself, Rob? Do you have like a war story or a case that you can sort of illustrate where you guys have been able to maybe either avoid insolvency or work through an insolvency, providing funding along the way or structuring some funding?
I'll actually use one that you and I are working on right now because, I slipped you $50 earlier. We had a client come to us, referred to us by a pre-insolvency advisor. They'd already entered into an SBR and the creditors had accepted it. It was it was 850 grand with a $400,000 upfront and 450 over 18 months at 30 grand, whatever the number was. The business, and they came to me to get the $400,000 as a broker. The business turns over $1.8 million a year. They're a cleaning company. And with Nick, we could raise the $400,000, but Nick and I are looking at this deed or this restructuring plan going, they're not going to be able to make the payment moving forward because the revenue is just not there. And it was just a bad plan. I remember you sitting in my boardroom and we're just looking at it going, how do we make this deal? And we're going, it's just a poor plan. There's no other way of doing it. Sat down with the director and, the concept was he was going to sell his commercial property that he was in. But no one had taken into account cost of sale, capital gains tax on the sale. He's like, I've got 400K equity in the property. I'm like, mate, you'll be lucky to get 180 out of it at the end of the day. So anyway, sat down with the director, went back to the practitioner, and whilst not ideal for the practitioner or the creditors, renegotiated the SBR to something that was achievable from a funding point of view. So rather than going to a payment arrangement, we've now got a term sheet out and we're going to documents on 650 rather than 850. We've leveraged the commercial property, which he's the tenant of. So we haven't used the family home. And the receivables ledger. And we're going to get them in and out. So they'll be in the SBR and out of the SBR in like 90 days.
Can I just touch bases? I'm not a big fan of SBRs. Okay, I reckon I'll keep it nice and clean. I reckon the ATO is selling SBRs, right? Like it's a wonderful thing. All right. To me, I'm totally against them. And the reason why, all right, number one, in the construction industry, no lawyer or liquidator would guarantee that their license will not get suspended. Okay? Because if their construction license can be renewed or guaranteed, you will have SBRs left, right, and centre. All right? But because there's the New South Wales government about licensing and renewals, they could suspend if you're on an SBR. It's going to cause more trouble, all right, than trying to say, there's SBRs. And now that the ATO is at 35 cents on the dollar, when they started at 15 cents, and the first year of an SBR coming in, no liquidator would actually do an SBR when it first came in. They didn't even know what an SBR is, okay, for the first 12 months, all right? It was like a COVID grant. You can do one SBR, one in every 7 years, and the debt has to be under $1 million. So let's not call it an SBR. Let's call it a deed of company arrangement, all right? A DOCA, you're better off. Suppliers with Credit Watch that has got no debts like a Bunnings account get notified if you do an SBR, whether the debt's there or not. So what's the ATO doing? It's not really helping, accepting 35 cents on the dollar. Let's be real in this room. Okay, feel people's pains and clients. Two is insurance. Your premiums are going up because the insurance are being notified when you do an SBR. So what are we doing? We're chopping legs of small businesses by trying to say we've got an SBR product. To me, that doesn't work.
So what's an example where the SBR has been an option, but you've done something, advised something instead?
Trading out of it.
Yeah.
All right, let's trade out of it. Let's look at finance. Prove to me that you could trade out of it and build up your business model, and let's drag the ATO out. Let's go into a 36 months plan. Let's go to war with them. Let me tell you something. You could technically, ATO, they're expecting accountants to be multi-skilled to know everything. But guess what? That rule applies for them. They've got the different departments, different states. They've got no consistency. Okay, number one. Number two, from a 36 month payment arrangement to a 24, you're dealing with different divisions. So if you care about your clients, go to the 36 months, drag it out. As long as the director's not ego, selfish and all that, and puts himself last, we can trade out of it. If they can trade out of it, drag him out. Hit the 12% interest rates. Big whoop. Guess what? Misleading conduct, misrepresentation. 3 years ago, they promised the world. Lodge on time, get into a payment plan, we'll remit for you. That whole 360 has now been reversed. But you know what? It's worth a go at the end of the day. So to me, I've done one SBR and I really don't want to go there. Okay? Only if I'm forced to go there, I will go there. But I'm totally, you talk about war, I'm totally against SBRs because I think they're hurting the client more than everyone else.
You just dropped off about 3 Christmas card lists.
But let me tell you, and this is why we're here, because we're not, everyone's entitled for their opinion.
Yeah, no, perfect.
But let the truth come out, okay? There's no facades, there's nothing like that. Let the truth come out.
Except about me. That's all right.
I know, it's okay.
Okay, listen, time's going on, and I've got about another 100 questions here to ask these guys, but I thought instead we might throw it to the floor. So has anybody got a question they would like to ask? Matt.
So 2 parts of the question. So the first part is, are there specific triggers that the panel's seeing from the ATO? Obviously there's non-compliance in different forms, but is there a certain point where the ATO says, we're going to act against this debtor or this tax-paying firm? Thank you. Is there certain trigger points where they're going to act against a taxpayer, which could mean some form of non-compliance, a certain level of debt? And the second part to that is, that question is, the ATO debt is now impacting credit files once they reach a certain level. Can the panel just mention that as well, and what impacts that's having? Because it is definitely being seen by lenders, which is an issue. Thank you.
For me? All right. So the first part of the question was, what are the triggers for the ATO taking firm action? Okay, their favourite word is engagement, the E word. They want to see whatever they consider to be satisfactory engagement by the taxpayer with the tax debt. So to them, that means complying payment plan, or even better, tax being paid in full when due. And then it becomes a bit inconsistent as to at what level or in what time frame and what firm action do they choose. It does feel inconsistent even as a professional advisor. So the general candidates are no lodgements for ages, typically, sometimes, usually at least over a year-ish sometimes. Also just tax debt sitting there or added to without a satisfactory payment plan in place. However, sometimes we're seeing it on some very small debts. Like the smallest director penalty notice that I've seen issued is $7,000. And then I'm like, and then you've got the other guy or girl over, well, this one was a guy over there with like 7 digits of tax debt, and the ATO is not doing anything. And they're like, how long do you think this will continue for? I was like, I don't know. It's how long is a piece of string, but I wouldn't assume forever.
You said something that's just triggered a question. I want to ask both of you this.
Yeah.
Is there, and Rob might I like this question as well, is there a secret sauce when it comes to dealing with the ATO? Is it who you know at the ATO, or is it just you've got to follow a formula?
It's inconsistent, Nick, which
Right.
is really hard.
Right. So there is no magic wand necessarily. Like, is one? What do you think, Danny?
Look, again, two things, right? The ATO is like shopping at Coles and Woolies, right? You go to that self-checking, right? They want,
Steal stuff.
and yeah, they just want you to scan. They want you to scan their goods and walk. Okay. And I'm like, hang on, I might as well do it myself, because in Practice Mail on the tax portal, we put recommendations in and we want to get into payment plans and all that. I'm old school. I started working at 9 months. I want customer service. Okay. This bullshit doesn't work for me. I get on the phone and I bat for my clients, and clients don't know how much accountants are going through. All right. We could be on the phone for 45 minutes or an hour and a half. Okay. I'm not a time biller. I don't bill my clients on time billing, right? What I do is I want results. Okay. So guess what? It's pot luck who's on the other side. So I'll hang up. All right. Let's try someone new. Let's try this.
Yeah.
Let's try that. And we keep
I've got
going.
him this time.
Okay. That's it. And you know who the best people are from the ATO? Believe it or not, are the people from Tasmania. Okay. So
Is that the first question you asked?
no. Yeah, I do. The ATO's on the phone. Okay. Put them through. All right. Yeah, we hear the same policy. It's getting recorded. I wouldn't have it any other way. So record it. All right. Get on the phone. And I do the asking. Where are you calling from? Right. And you know which branch is the worst out of all of them?
Sydney.
Parramatta. So,
Everyone's
and
Christmas
it's
cards.
unbelievable. Like, I think someone touched bases on it and people forget. We're humans. We tend to forget. Does anyone know that from 1st of January 22 to May 22, 4 months of rain in Sydney had a huge impact? All right. So the ATO rings you up and says, why have we got a debt? Mate, construction was down for 4 months, but people tend to forget. They don't like talking about COVID.
All right, I reckon we're going to squeeze in two more questions. So, yep, one over here. One more.
So I've been around a while, as you know, and ever since I've been around, this ATO issue has been a problem no one's addressed. Harbour addressed it in 92, got rid of priority, it came back as a DPA. The ATO is a poor, fourth-rate lender. So when are the professions, banking, accounting, insolvency, brokerage, going to unite and stop this happening, stop the symptoms, stop us looking at the symptoms and address the elephant in the room? The ATO is causing problems.
I'd like to. Oh, you go. Yeah, you go first.
Just a really simple one, because you said when is industry going to resolve this problem? And this is utopian fantasy, but as Danny mentions, it's self checkout. We have 5 banks in this country. Really, do you know what? Banks collect it, directors go and remit to get it back. I'm sorry.
Look,
Let's say GST is our biggest issue. 10% of every dollar that goes through a company account gets held and accrued and remitted to the ATO. Directors go and get it back. You'd be out of a job. Your job would be a lot easier, and I'd be lending for business growth and asset acquisition.
Yeah.
That's like utopian, but that's
Look,
yeah.
that's what I guess you could go down there. I mean, what I think what Riyadh's getting at is that the ATO is in a privileged position. They do see a lot of stuff, like, let's say you're a plumbing supply company, you're supplying the plumber. As the plumbing supply company, in spite of the ads that I hear on the radio in the morning, you don't have the line of sight the ATO has. And I suppose Riyadh's saying that the ATO should not have any way of getting in front of that plumbing supply company when it comes to the waterfall through DPN or any other mechanism. And I would say, as a non-bank lender, COVID, I say to people, and we share the pain that the insolvency profession, we suffered during COVID because we were competing with the ATO, who was the biggest lender. And, my worldview is that no business should ever have to compete with the government for anything. If the private sector is willing to supply something, then the government shouldn't be stepping into those shoes. So that's a bit of a sort of an ideological point, I suppose. But yeah, please.
Yeah. Can I just comment on Riyadh's comment? I think it's really, really important what Riyadh has actually mentioned. I totally agree with Riyadh. And I've had the pleasure of working with Riyadh and his team. And let me tell you something, right, really, really important is, and I mean this, right, you're only as good as your team, both internal and external. When a client walks in for me, right, I don't dictate where they go, what broker they want to go with, what bank, or anything like that. But I tell them, if you don't have the right accountant, the right finance broker, the right lawyer, get rid of them. Okay. So teamwork is important. And I believe it's not this marketing tool, social media and all that. Like today, it's really, really important, like events like today and other events, you network in person. Okay. In person. I'll say it one more time, in person, because you want the right people around you. Okay, no matter what, it's problem solving, decision making, trading out of it, business modeling. The last thing is tax compliance. Tax compliance should be so easy that it's technically a procedure of lodgements, no surprises, because you've got your foundations correct from day one. Okay, in the business. So it's important to have the right team around you.
I agree 100%. I think I like to think it's one of, I mean, I will do a sales pitch if you don't mind. I think it's important that that as an individual, you can say, look, it's not just me. I know who to call if it's a lawyer, an insolvency, an accountant, and we can work together as a team, because I'm not an advisor. I'm just a financier. You need a good accountant. And I think it's a very important value add. I had a broker who I've known for many years ring me last night. Actually, as it happens, he's invested in a company that's going through a docker, and he wanted some help in getting someone to help structure the docker. And I think that the fact that you've got the right team and you know the right people and you've got the right connections, and I think that's why we've got almost 100% attendance rate here today. There's one very quick last question.
Yeah, just one question. As far as the companies coming to business insolvency, how much of an issue do you see for productivity, lack of productivity of both the staff on the job, on the sites or whatever, asset utilisation?
I don't often get a view into the actual productivity or how good they are actually at their core product or service, because usually by the time they come to me, they have 1 to 5 major debt issues where creditors are chasing them, and then that becomes the focus. So I don't know about staff productivity on site. Asset utilization is something I do get a bit of a glimpse of. These guys will probably see it way better. But one of the things we sometimes do is refer out for refinance, because that asset could be working harder for them. And sometimes there are just assets sitting there idle where they desperately need the next 20,000 to get them through the week. And I'm like, well, do you really need, 12 utes? And they're like, no, actually, we're not using 2 of them. I'm like, please sell them. And so, yes, I do see asset underutilization.
Because the
Not
numbers,
horrifically, but it does exist.
yeah, but it's reflected in the numbers.
Yes, that's exactly where everything sits.
All right.
My saying is to that is numbers do the talking, and they paint pictures, and you have to let them talk. They paint the pictures, and you have to understand your business. So, for example, ego, I've got all these cars, 5 years, not 30, refinance, get rid of them. The wife's driving the best car out of all of them. We've got FBT problems here, all that kind of stuff. What are you doing to yourself? Do you get what I mean? And you start questioning things, but you're actually helping them. But talking about teamwork, Nick, the one thing, and it's healthy to do, you need more than one lawyer these days. Go and get secondary advice. Don't use the same liquidator. Don't use the same broker. Okay? Do the health check. All right? Because
What about accountant? You use the same accountant?
you don't have to. Okay? You can get a commercial account and tax account, but it's important. It's important to make the right decisions.
All right. Look, I thank you very much. I would like to just wrap up by saying that I have created this little downloadable, the diagnostic matrix for cracking the tax debt code, just lining up different, whether it's growth or trouble, and what are the key indicators and what the tax debt's doing and what a funding strategy out of that might be. So ping me an email if you would like to see that. And I am going to say thank you very much to Louisa Sijabat, to Robert Gruel, and to Danny Garley for joining us today.